I'm Manuel Adelino. I'm in the finance group over here at Fuqua. So why do we have this panel? We heard with our previous speakers that a lot of technology is already in place. But at the same time, we also heard from Greg Lowe that in 15 years, the world is going to look different, and that's going to require innovation. And early stage capital plays an important role in a sense, picking ideas, in shaping what innovation actually gets deployed, actually reaches the market, actually can get through the valley of death. So we want to think about early stage capital and early stage ideas and what role it plays in this transition to net zero. And we have a fantastic panel today. So I'm just going to very briefly introduce who we have up here. So Sarah Cannon is an advisor at Coatue, where she was previously general partner and head of Europe. And we've heard about some of the geopolitical implications of the IRA. And so we're going to touch on those issues as well. Genevieve Kinney is investor at General Catalyst, where she leads the firm's climate and energy investing strategy as part of the broader global resilience thesis at the firm. So we'll hear more about that. And Eric Toone is coming back to Duke after a few years. He's managing partner at Breakthrough Energy Ventures, where he leads science, technology, and engineering across the whole platform. So what I'd like to start with, and to turn it over to you, is to hear from you sort of recent projects in this space that you're excited to share and talk about. Sort of in lieu of a longer introduction, just tell us about some of what you've been working on that you would like to talk about.
Great, happy to start. Lucky hot seat. So it's always the things I'm most excited about tend to be what I work on between 11 p.m. and 3 a.m. And for me at the moment, it's this idea of debt for nature swaps. So I've been studying a lot the blue bonds in Ecuador and thinking about how this could be a precedent model for actually, this is Sarah's new crazy idea, debt for humanitarian aid swaps or more refugees. So, I mean, as many people in this world know, and you mentioned the global context, so I thought I'd go with it, there are going to be probably 100 million more refugees in the world due to climate change. And I think we need to have innovative financial projects, new innovative financial instruments, I'd say, in the private sector, but also on the international stage. And could you actually reduce debt for some countries if they're willing to take in these refugees and offer a certain kind of support? So something I hope to be working on a lot in my midnight hours in the years to come.
So I'm going to tease a little bit things that we are working on, but we have not announced yet, so I'm going to keep it a little bit under wraps. But a very, very ambitious project in the energy generation space, which will be, extremely first of its kind. I think that in the venture capital world, as we'll talk about more, we sort of struggle with how do we invest in these technologies, how do we invest in these companies that might be far more capital intensive than a $20 million minority check will get you, or might have much longer time horizons. So we still have ambitions to help support those technologies. So how do we sort of de-risk some aspects that make it more palatable for us? So this large, ambitious energy generation project, we really thought through a financing structure where we could take some of the risk out of future capital needs. Maybe it's partnerships that we work on with the industrial base or with strategic partners. So that's one that keep your eyes out for the next few months. And then another that we'll be announcing shortly is more in the software space and sort of the climate risk space. Another interesting kind of structural investment we're making there. So I think we've really spent time kind of looking across the spectrum. Nothing was too out there. Nothing was too practical. And I think over the next 6 months, we'll really be focusing in on some of those areas. But I think this conversation today is super important into, what are the technologies and spaces that are going to have the policy support, the capital support, and the corporate support that will make it a very durable, opportunity. So.
Great. So at Breakthrough Energy Ventures, we've really tried to assemble an incredibly technical team. So that's really what we do. We're focused on the technology. We have sort of a very unusual group of people around the table. So the things that we're usually most excited about involve early stage technology with broad application across multiple sectors. And if you sort of made me pick one that I stay up nights excited about these days, it's white hydrogen or geologic hydrogen. This idea that there are places in the world where hydrogen comes up out of the ground naturally. There's a number of hypotheses about where it comes from. We believe the most important and the most likely is the reaction of iron 2 with water to make iron 3 and hydrogen. Hydrogen, of course, is sort of the Swiss Army knife of energy, right? Hydrogen is pure reactive chemical energy, highly reactive, highest gravimetric energy density of any element. And so if you have enough hydrogen, you can do anything. So obviously we need hydrogen to do Haber-Bosch that produces the ammonia fertilizer that is exactly the reason there's 7 billion people on this planet today. You can make fuels, you can make steel, you can make food, you could make anything. You have enough hydrogen and it's cheap enough, you can make anything. So this idea that there are potentially very large quantities of very low-cost hydrogen, what does low cost mean? We believe considerably less than $1 a kilogram at the wellhead. Large quantities, Jeff Ellis at the United States Geological Survey has suggested that there may be more than 1 trillion tons of that hydrogen accessible just in the United States. That, of course, is enough to power the entire planet for thousands of years. So that is the area that I'm sort of most excited about these days.
All right, well, thank you. So we know some of what our panel is working on. I want to turn to the IRA. I want to remind everyone that you can submit questions. I won't be able to get through all, but I'll be monitoring this closely. So please submit questions, and I'll be happy to pick a few. But let's turn to the IRA, and I'll go to Eric so that we can flip the order, and so you're not always in the hot seat. So what do you see the IRA's role in this space? What do you think is happening that would not happen in the absence of the IRA?
Yeah, it's been absolutely transformative in the spaces that we look at. And across the entire spectrum, obviously our team was very involved during the inception and development of the IRA. But we've seen myriad investments in hydrogen, not just geologic hydrogen, but across the board in hydrogen. It's been absolutely transformative there, the amount of money that's flowed into that. Carbon capture is another space that we've seen tremendous investment. So, the IRA in our sector and what we do has been absolutely transformative.
Yeah, and I think if you look at, the original intention or thought process on, how much the IRA was going to cost and how much it was going to lead to development, we have so far surpassed that. Again, like the title of this forum today, right? This is going to be trillions now of dollars of private investment in these spaces. So just the catalytic effect of that initial plan is really extraordinary. I think that from what sectors are interesting, as Eric said, a lot of money getting put into sort of hydrogen development. I think timescales for our world, for in the venture world, are very important. We want to make investments from a traditional venture side that have 7-year return cycles. So we spend a lot of time also thinking about not only where is the money going, where is the commercial interest, but sort of what's the time scale to real development and commercialization and scale for some of these technologies. And some might not be right for venture given those realities. I think electrification, is a huge benefit from the IRA, and I think the scale that it is enabling throughout the United States wouldn't be feasible without it. The infrastructure development for EV charging and other things like that. And then I think beyond just technology, the manufacturing scale that it's enabling that we need in order to deploy some of these technologies is really critical. So I think it's not only inspiring new technological innovation, but also practical implementation. And the marrying of those two things was very important.
All right, so Sarah, I'll turn it over to you, but since you are in London, I'd like to hear also about what did you think was the reaction of the world to the US announcing that there were all these billions of dollars?
This is dangerous. An American speaking for the world. But
Isn't that what always happens?
yeah, I mean, I think we're pretty good at that. No, I'm joking. So yes, I am American, but I moved to London 2 years ago to help open Coatue's office in Europe. And we're a multi-stage investment platform, and I got to think about what's our strategy. And as a part of a global platform, I thought, what could Coatue Europe add to the global kind of performance of the firm? And I thought, well, obviously, climate. This is where Europe's going to lead. A lot of the consumer, government, private, incentives have been stronger over the past decade. And since, and then when the IRA happened, it kind of lit a fire under Europe. Everyone was like, wait a minute, hold on, the Americans are in the game. Like, this is not, it is great, obviously, because we're all working towards the same goal. But at the same time, it really did change dynamics. And I have to give them credit, because in the policy and response, they at least got in the Green Deal for industrial policy, at least they got green in the title, which we had inflation. So I give them that. But I think, yeah, exactly. So I would say, one, it really did, I think, was a wake-up call. Is like, hold on, this isn't a market that we're only going to be in, we're only going to lead. The Americans are coming. We need to pay attention. And I've seen a lot of kind of even more startup activity, I think, as a result of that, realizing the time horizons for competition, potentially from American companies in Europe, from spaces like heat pumps or carbon accounting. You're seeing a lot of the American players come to Europe. So I think it, ironically, has stimulated a lot of activity in Europe, which is obviously a great thing for everybody.
So I want to, before we move on, and there's a few questions here that are great minds think alike that I want to get to. But before, maybe we can just briefly talk about history and recent history, and talk about, so we had sort of clean tech 1.0 boom, and while good things came out of it, better thermostats, on this point about thermostats, Nest and others.
Yeah, right.
But there are good things that came from clean tech 1.0, but there's also a sense that it didn't go as desired. So I wanted to ask, what did we learn to do better this time in this venture space? And I'll let whoever would like to take it first start.
I'm happy to start.
Okay, go ahead.
I'll go
Sorry,
back to back. So I think sometimes when you're a hammer, everything is a nail. So when you're a venture capitalist and you think there's an exciting opportunity in clean tech, you use the existing products that you have, which are largely equity investments. And I think the lesson, and I was not investing at this time, I should caveat, but I'll still feel free to speak about it, that we learned is that the existing kind of financial instruments in venture, in private equity, maybe weren't perfect for the kinds of projects that were first of a kind, they were capital more intensive, they were more like longer time horizons. So I think one of the most interesting things right now is for the venture and kind of really private investment community writ large to think about what are the kinds of financial instruments that we really need to map to this kind of risk and these kinds of time horizons. Is it debt and equity? Are they different pools of capital with different time horizons? When these companies go public, is there a different kind of green stock exchange? I think really getting the financial instruments right is something that at least I and my firm took away from the first kind of go round. And then maybe the second learning, I would say, is just having a real view for what happens when the subsidies run out. I mean, we as a firm talk a lot about would we invest in anything with the green premium, which is essentially saying that you're willing to pay a higher price, and that could be filled by subsidies. And I think, and people have very different views on this, but I think, we were hesitant to invest in anything where you really had to believe that for an extremely long time horizon, because you want to be at cost parity in 5 to 10 years whenever your exit time horizon, is. So those are two that stuck out to me.
So I think with all due respect, as a venture capitalist, and again, I was not investing in this period either, but our CEO and managing partner was one of the prominent investors at the time, so has a lot of battle scars from investing in this period. And something that we think a lot about is transforming whole industries. We're seeing that now with the shift to renewables. We've spent a lot of time as a firm in the healthcare space, also trying to sort of transform that. How do you bring down the cost curves in the healthcare space? How do you make it more efficient? And we think a lot of that is driven by public-private partnerships and collaboration sort of with existing industry. Honestly, us investing $20 million, $50 million in various healthcare technology companies is nice, but it's not going to change the healthcare industry, broadly speaking. So how do we create partnerships? We have like 15 health system partnerships. We just announced that we're buying a health system to sort of walk the walk in how you transform that. I think our strategy around climate and energy is going to be very similar. So how do we bring together the policy side, the different capital providers? I think Sarah's absolutely right. We need sort of new financial instruments for these types of investments. And then how do you bring together the corporate side? It seems like in the 1.0 era, we were very focused on the technology, which is correct, but sort of missed that we needed to make sure the policy was durable. We sort of missed that there were other countries around the world that had production facilities that would far outpace us, on the solar side in particular. So just thinking a little bit more broadly and holistically, I think the comment was made earlier, we have a lot of this technology. So it's now how do we create a really durable ecosystem to actually bring it to scale?
So what I can tell you is that Bill Gates and another group of ultra-high net worth individuals created Breakthrough around a particular set of hypotheses about what failed in Cleantech 1.0. And certainly part of that was trying to map the tech model of investing straight onto tough tech broadly and clean tech in particular. And those things happen very differently at very different timescales and with very different amounts of money. If we're sort of honest about the way tech investing works, I go out there, I see 50 opportunities, 43 of them I'm pretty sure are never going to work. The other 7, I don't know, maybe. So we'll give them a little bit of time and a little bit of money and we'll see what happens. And that works fine in tech because a little bit of time is 6 months or a year and a little bit of money is $500,000. The problem is when we get to tough tech, a little bit of time is 5 years and a little bit of money is $30 million.
Yeah.
And you just can't do things that way anymore. And so we built a venture firm that has a whole bunch of people like me that you'd never find in any sort of normal venture firm, right? And it's full of people, like that. And that, Bill is obviously a technophile, but that's part of that. So that's certainly one issue. Things scale very differently in this space than they do in tech. They don't scale the way that ebooks and apps and iPhones scale, right? It's steel in the ground stuff. It's low margin. It's enormous quantities of capital. And so building longer term funds, building a whole suite of financial vehicles around these things so you can think about how you're going to scale right from the get-go. So this organization was built very deliberately. Was it right or not? Well, we'll see.
So I want to actually precisely touch on this point because we're getting questions about how does one fund the first of a kind? And you said the other day, I really like, everybody wants to go 4th or 5th?
Yep. Everybody wants to be 4th in this space.
But somebody needs to be first?
Somebody needs to be first. And I think that for the most part, those first-of-a-kind products need concessionary capital of one form or another. And ultimately, it has to be public sector dollars that form that concessionary capital, whether that's in the form of outright grants and other assistance to build plants, whether that's in the form of tax credits and things like that. But there has to be concessionary capital to put these things on a cost curve and to understand what their ultimate cost entitlement is. There's a really interesting distinction between technologies that scale up and technologies that number up. Right? And so, if your first-of-a-kind plant costs $1.5 billion, and this has happened to me, okay? First-of-a-kind plant costs $1.5 billion, you can tell people, well, how many plants to get to your ultimate cost entitlement? What's the nth plant? And the answer is 6 or 7. And you sort of sit there and go, okay, so $10 billion to figure out what my cost entitlement is. Are we really going to do that? So I think that there's a bunch of things that we have to think about how you do scale.
Yeah, I mean, I think it's a lot of what we're trying to figure out as a collective group here and alluding to in terms of, the IRA was great in, I would say greasing the wheels. Maybe there's a more elegant technical term to use, but I'm gonna stick with that. And I think it's inspired a lot of technologists, people coming out of universities, giving them the incentive boost to get there. I think we're still struggling to sort of translate that and scaling lab demonstrations and pilot demonstrations to real first-of-a-kind plants. I think there's still a little bit of a gap there, but there's a lot of private investment innovation coming through, and you're seeing a lot more in sort of the venture infrastructure space that wants to tackle that side. I think it's still early, but I think just coming together and trying to figure this out, because my impression is, and there's others in the room much more involved in this side of the market, which we'll hear from later, but there's a lot on this sort of fourth and fifth, right, the infrastructure side, but really getting the first of a kind, you have this discrepancy in not only return profiles between sort of venture and risk appetite between venture and infrastructure, but frankly cultural differences too, and sort of how you look at things, how you underwrite things, what you're willing to do, and I think it's non-trivial to kind of to bridge that. But I think we're making a lot of progress. So
I'd say I think venture is very ill-suited for first-of-a-kind projects, ironically, in this sector. But I think corporates are very well-suited. So I'll say I met a really compelling entrepreneur in the carbon capture and sequestration space. It was the first one. I thought, oh, it's my first week. I found the best deal. We're obviously going to invest in this woman. She'd been at NASA. The technology sounded so promising. And then I got the model back from her, and I was digging into it, and I was like, wait, 20 years, this is broken. Like, this can't be right. Like, your first facility, and so obviously it was not going to be an investment we made, and I thought, okay, well, maybe not this company. Maybe we'll meet a bunch of others. And what we ended up discussing is we have climate-specific funds, and we discussed that does both publics and privates, and we had a discussion as a team, and the debate was like, who's really going to be doing a lot of these investments? Is it going to be startups, regardless of where they are in the world, or is it actually going to be corporates? Like, are the oil, the energy majors going to be the ones that actually have the capital intensity, the expertise, and the science knowledge to actually be the ones to do some of this? And so it's interesting parallel. I was just thinking as you were talking to Genevieve, like, I wonder if it's something we're seeing in AI. So I couldn't get the day go any longer without mentioning this. But what you see that's interesting is a lot of corporate investment. NVIDIA is very active. Microsoft is very active. And you're seeing these corporates kind of cross over into things that venture capitalists used to do. And it's because of the technical, well, there's a lot of reasons, but the capital intensity of the compute. And so it's an interesting phenomenon where I hope we see more of that of, you've asked a lot about partnerships, but you see kind of corporates and venture capitalists each kind of solving for their risk profile and time horizon. But I think that could be a very good thing for the ecosystem, given the expertise and the balance sheets, frankly, that a lot of these companies have.
So can we touch on this again? So the partnerships point, this idea that venture cannot do it alone. What kinds of forms can these partnerships take? And what does each side, in some sense, bring to the table? Because it is indeed a very different model. You're right, AI in that sense is providing us a place where we see some of this. But can we explore this a little bit more, given we have corporates in the room and we're going to talk to private equity, project finance. What kinds of partnerships are we really talking about that can be successful in this space?
I think that one, we're not investors, but been really fascinated by what some of the larger scale technologies have done, and I think we've seen recently, a company H2 Green Steel, which is making green steel in Sweden, and I think they've raised like $6 billion, $4 billion of debt across 20 lenders, which is both private and government lenders, $3 billion in equity capital, $250 million in government grants. So, and they are just building their first plant. So this $6 billion, I mean, you were talking earlier, your nth plant. This is their first plant. But it's been really innovative. And one of the things that they did in order to get $4 billion in debt for their first plant was work with the strategic partners, actually sort of work with all sectors, all parts of their business. So they lined up their supply chain partners. They lined up the PPAs to generate the energy to run these facilities. And importantly, they also got offtake agreements from some of their customers for 7 years and guaranteed. And I think that is one of the things that's going to need to happen. We're going to need to figure out a way to get customers more comfortable with providing certainty around the demand so that we can, have lenders who feel comfortable enough to lend money. So I think that's kind of one of the gaps, but there have been some really interesting examples. H2 Green Steel is one of them, but there have been a number of others, so.
I would keep hammering on the public-private partnerships. Okay. There's, a lot of this concessionary capital is just going to have to be underwritten by the public sector. So there's that. We're also seeing a lot of very large investors going much earlier. right? So people like Temasek that have $500 billion balance sheets are all of a sudden investing alongside us, not just in our funds, but alongside us. And that's allowed, Commonwealth Fusion Systems raised a $2 billion Series B, right? So there are some investors that have not historically been involved in this space that are now coming to this space, and that's very, very encouraging.
So I was just hearing about demand, and indeed in the previous panel we also talked about sort of supply and demand. There is a real sense in which the idea behind the IRA, and we heard that this morning from John Podesta, is to grease the wheels so that we can reach a point where private capital may be enough. Maybe one day, and I don't know, maybe this is part of the question. Can one day private capital be enough? And that seems to require coming down the cost curve. But can we talk more about what still needs to happen for us to reach the point where private capital may be sufficient? And I'm happy for an answer to be, that's not happening in the next 20 years. But I'd like to know, what are the uncertainties that are left to resolve for us to be able to get to that point? And maybe some of this does have to do with demand for some of the products, some of the technologies. So maybe we could develop this point about what still has to happen, what still uncertainties are left to resolve.
The major one that stands out to me are exits. So successful public companies,
right.
Just like a few heroes.
Yeah.
And if you think about how much, someone reminded me the other day that Tesla was also born at the same time that we all talk about some of the challenges that were faced during the first kind of episode of clean tech investment. So I'd say having a public company that has been successful, we can debate this, but it's a wild success related to a lot of the other companies that started at the comparable time. So I think having that, and investors sometimes can be extremely thoughtful and rigorous, and other times lazy in the sense like, has there ever been a multi-billion-dollar company in this category? I mean, our investment committee is so often, is there a $10 billion TAM for this? And have there been public exits? And when there have been, you say, okay, then we know how to value the company, we know what the business model looks like, we know what the risks are. So I think exits would do a lot to change perspectives in kind of each specific vertical. That's one, and then two, and Mr. Podesta gave a very thoughtful answer to this around the certainty on the regulatory side, right? Is like they did everything they could, I think, to give us a 10-year view into that, but there's still obviously some regulatory uncertainty that exists. And I've been investing a lot in Germany, and we saw that the same thing in their budget, right? So it's like, how do we, I think the regulatory, as much the regulators can do to say, regardless of election, here's what we can guarantee you, and should this change, this will remain, and this may be at risk, would really help investors on the private side.
I would echo the point on exits, right? The IPO market's been closed for the better part of a decade. The people that are putting money into these funds are investors. They're investing people's pensions and things. There have got to be exits, and that is a huge missing piece of this puzzle.
And so on this point, I just want to point out that indeed, if that means that the place where you want to do this is where capital markets are most developed, and I think the U.S. then becomes, has a big advantage in that relative to other countries. That's where you see the large exits on average relative to other places.
I think we were literally just talking about that before the panel started, but I think one place, I don't want to say it has an advantage, but I think that is absolutely true in the public market and IPO market. Before I was at General Catalyst, I spent 6 years at Morgan Stanley taking tech companies public, so know this world quite well. I think Europe has a really active opportunity in M&A, right? They have a lot of the large industrial base that is, you would think, presumably very incentivized to acquire some of these technologies, integrate some of these technologies. So I do think that, there's not all hope is lost. I do think that that's a real opportunity for Europe, which we have here as well, but I think that still gives me hope.
So maybe we can turn, because we've been having quite a few, people were excited about the hydrogen, the trillions of hydrogen digging there. So can we turn to what you think are the most promising technologies that you see out there? And maybe you want to develop the hydrogen. There were questions about why did it take us so long? Maybe,
it's a really great question. People first identified geologic hydrogen at the end of the 19th century. And in the middle,
it's taken a while.
It has taken a long while. And in the middle of the 20th century, there was a very large scientific effort to understand the origin of abiotic methane. It turns out that there is a lot of natural gas that is abiotic. And so there was a huge effort to try and understand that, and it turns out that the ultimate source of that, too, was natural hydrogen. But for whatever reason, these various communities didn't really connect, and it was really the identification of a flowing well in Mali in 2014 that started the world down this path towards geologic hydrogen. But it is a fascinating history. But it also brings up another set of, so I mentioned, what are you going to do with hydrogen, right? Well, okay, you can make fertilizer, that's 2% of global emissions. But now if you start thinking about other things, maybe I want to make fuel, maybe I want to make sustainable aviation fuel. Well, now I need carbon. So where does the carbon come from? Right? So that all of a sudden becomes the long pole in the tent. And how are you going to move it around? There's 250,000 miles of natural gas pipeline in this country. There's 1,700 miles of hydrogen pipeline in this country, right? So there's a whole new set of technologies and developments that are necessary as this resource becomes available. So it's not a silver bullet. It starts us down a path.
Mm-hmm.
I would say that to answer the question of sort of what's exciting, we have to, again, go back to sort of the timescales. I think what's exciting in the next 5 years for a venture investor is a very different answer than what's exciting in the next 10 years and the next 15 years. We look at all of those things, but we have to be kind of thoughtful on where we prosecute investments at the moment. I think in the nearer term, there's such an extraordinary opportunity in the software systems and systems engineering space. Just literally, practically speaking, how do we scale these technologies? How do we orchestrate them? How do we make them more efficient? Huge amounts of opportunity. Sarah alluded to this a little bit as well, but another place we're spending a lot of time is thinking through, like, what are the different market structures that are going to evolve? Are there different financial instruments? Are there different, financial markets that are going to come from some of these new technologies, some of the policies that are happening? So I think over the near term, that type of world is kind of what's most interesting and what's most investable. I think when you look over the longer term, probably controversially, but we are very interested in the nuclear space.
Fission or fusion?
Both. And honestly, a lot more time in fusion, actually.
So we're 100% fusion.
Yeah, so a lot of interesting stuff we've looked at
Absolutely.
there. Not 5-year timelines. I think some would argue 20-year, but I don't know. But
can I ask you for a probability around that, since both of you are interested? Can I ask for a probability? Is it 50% chance, or is there a 2%?
A 50% chance of what?
That we can execute on fusion and make it.
Way higher than 50%. Okay. I mean, this is going to happen, right? I mean, the old joke is that fusion's 20 years away and always will, right? But that is not where we are. There have been over 200 tokamaks built, and the development of these super high strength materials, magnets, right, means that you can build tokamaks that now are a reasonable size. They don't look like ITER, and Commonwealth Fusion is building a device right now that will be online producing more power than it consumes in 2025 or 2026, right? You saw Type 1 just signed an agreement with TVA to build a stellarator because there was a stellarator built in Germany and people showed that you could build a stable plasma and you could, so this is not a low percent, Hail Mary. This is going to happen.
Yeah, and I actually, I hesitate to say this to a group of very informed people because I might be really wrong, but I am not sure that the time difference between scaling fission and fusion scaling is going to be that different. Like, I actually think there will be maybe some short period of time where it is more plausible to scale fission, but I think if we can continue at the pace of innovation and execution that Eric is speaking about, like, I don't think fusion is much further behind given all of the challenges in fission technology. So it's part of the reason that we are kind of spending time. It's like, if there's an incremental step or a longer term step, we kind of want to understand both. But that's an area, and then I think that, critical materials exploration, development is also very interesting. Challenging to do. I think AI is, we're seeing a lot of companies sort of in that space. TBD how the value accrues there, but really, really promising, exciting stuff.
I'll add 2 easier ones potentially. Well, we'll see. But batteries is an area where we, have been spending a lot of time investing, kind of both in Europe and the U.S. Thanks to Ronnie, I now know I should be looking in North Carolina for my next investment. So I'd say that's, probably the thing we're most enthusiastic about as a fund. In addition, I will say there's still this electric vehicles opportunity. This is one of my favorite facts about Europe. So in Norway, the percent of new car sales that are electric is 80%. Now, that's the power of incentives. But I will also say that I came in last night and rented a car. I lived in the UK for 2 years and have not driven. So I was very nervous about driving and on the right side of the road. And but they gave me an SUV. And I was like, I cannot go to this climate conference at Duke in an SUV. And the guy looks at me, he's like, lady, that's what I've got. And I was like, well, he goes, wait, I have a Prius. And I was like, fabulous. He says, it's hybrid. I said, I'll take it. I didn't want Ronnie to throw me out. So we've been friends a long time. So I got in my Prius, and then I go to leave the parking lot, and the guy's verifying my license, and he goes, why'd you get that electric car? It's so ugly. And so the guy said, he's like, no, the charging infrastructure, we had some Teslas, and even with their charging infrastructure, so it just reminded me that there's still actually opportunity to build out a grid, to, change people's perceptions about the range of vehicles. I mean, our panel before was talking about kind of all that's to come in the vehicle range, but I think there's a consumer perception that really can change, and I think there's very interesting software around kind of making that findable and helping to manage long-range journeys and things. And I think AI makes all of that, to your point, Genevieve, more interesting. So I think there's a lot still to be done.
So this is great, and for a natural pessimist, I'm feeling really optimistic, so that's nice. So I do want to take we have about 5 minutes, and I do want to make sure that we get to this. So there is a sense in which everything that we're trying to do in the developed world is not really going to work and make a lot of difference if many other places don't either catch up or do something different. So can you speak a little bit about, and Sarah, you started us sort of thinking about the rest of the world, which is nice, and thinking in particular about sort of less privileged countries in terms of income and development. Is there a chance, can we also be optimistic there? And is there a chance that these countries can leapfrog some of the technologies that we have as sort of legacy, and that improvements here and in Europe can then translate into better outcomes over there?
I'm going to think of an analogy from the fintech world of M-Pesa, where really on financial payments that really did start kind of digitized payments outside of the United States. So I keep thinking in the climate world, what's the alternative going to be for that? But I do think, honestly, maybe this is just Sarah's point of view, this is not Coatue's, but I do think there's a real debate to say, you had your time, we're going to have our time, and how do you compensate us? Like back to my debt for nature swap, are there creative financial instruments we could say where you can get to develop in a way that you deserve to develop GDP per capita, and we can also get something that we want and find a trade? And India is actually the market in the world I'm most excited to see kind of what innovations come out of India on this front.
Yeah, so our starting in climate and energy, about a year ago, was really part of a broader thesis we have around global resilience. And there's a lot of talk about, is it deglobalization? We really believe in a sort of reglobalization that you're seeing. And part of that is countries and regions wanting to build defensibility and resiliency in their critical systems, whether it be defense, industrial automation and supply chains, or in sort of energy production. And I think you're going to see a lot more cooperation for countries and regions in trying to achieve those goals. And so, John spoke earlier really eloquently in his new role. This is going to be a big focus for him, I imagine. How do we work with some of our allies to leverage technology know-how, maybe batteries with South Korea, or production or manufacturing capabilities. So I think, whether it be Vietnam or Mexico or other places, how can we leverage those countries, and how can they leverage our technology and know-how there? And I think that this is a really interesting and exciting opportunity because, in some ways, some of the challenges we have are because retrofitting existing industries and legacy industries is in some ways a lot harder than greenfield builds. And we do have the opportunity in some of these countries and regions in the emerging markets to make these, greenfield builds. And if we can, enhance broader global prosperity, I mean, it is beneficial to the developing market as well, or developing markets as well, from immigration and global business perspectives and lowering the cost curve. So I think it's kind of incumbent on all participants in the ecosystem to sort of think through how they can think more globally to sort of accomplish some of these objectives.
Yeah, I sort of don't want to be Debbie Downer here, but I think the point that your point that we have to raise global prosperity is really the key. Economies decarbonize as soon as they get wealthy enough to be able to afford the luxury. That's what happens, right? As people acquire wealth, they want shelter. And so China used more cement in 3 years than the United States used in a century. As people acquire wealth, they want calories. They want meat, right? As people acquire wealth, they want mobility. And so economists use the number of cars in a society as a measure of the size of the middle class. As, and on and on and on and on. And so you look at Senegal that just found 5 trillion cubic feet of natural gas. The per capita GDP in Senegal is less than $2,000 a year. In this country, it's $80,000 a year. Do you honestly think we're going to go to Senegal and tell people not to use that natural gas? We have to encourage prosperity broadly and by whatever mechanism, because people decarbonize as soon as they can afford the luxury. Until then, not happening.
All right. Well, thank you very much. I think this was great.
Interesting.
Thank you.
Thank you.